What is DeFi? If you want a simple explanation without too much of technical jargons, you are in the right place. DeFi is a shorter name for decentralized finance. But, what does decentralized finance even mean? Before we get into that, let us see what we currently have. We are so used to money coming from an authoritative source, like government, or a bank. For example, we know the central reserve banks of the world print their own money whenever they need. If an individual needs money, they borrow from some financial institution, or a bank, which we call as a loan, and we also deposit money with a bank. All financial institutions, including banks, are centralized, meaning there is a central authority interacting with all the customers, and making financial decisions about who is allowed to access what type of service with the bank. This is what we call as centralized finance. If we can build a financial system around decentralization, or without any centralized authority, we would call it as decentralized finance, or DeFi. That's what we are going to talk about in this video. Financial system is a very broad term, and it has several components to it. DeFi, or decentralized finance, involves peer-to-peer financial services, on blockchains, primarily Ethereum blockchain. Blockchains are distributed ledgers, on a decentralized network, and are essential for the creation, and maintenance of the cryptocurrencies, among other things. Please take a look at our video on blockchain, for more details. Bitcoin was built on its own blockchain, called Bitcoin blockchain, but it does not have strong support for a general-purpose language. Ethereum blockchain was created as an improved alternative to Bitcoin blockchain by Vitalik Buterin, who used his knowledge on cryptocurrency and blockchain. Ethereum has support for creating powerful decentralized applications, also called dApps, using a language called Solidity. The dApps can then be developed and deployed on the entire Ethereum blockchain network. We need to first understand the different components of a financial system, which includes banks, other financial institutions, stock markets, insurance, etc. If we need to build a full-fledged financial system that is decentralized, then the components that become part of the financial system will need to be implemented here. Let's start with the main element of the financial system, which is money, and the transfer of money between individuals, businesses, and financial institutions. If the different currencies that we are used to, like US dollar, UK pound, euro, etc., which are called fiat money, are all centralized, then what is the equivalent in the crypto world? Well, if you know anything about Bitcoin, or any other cryptocurrency, you know that these cryptocurrencies are not issued by any bank, or financial institution. Instead, it is created by computers through a process called mining, in a decentralized network. We know Bitcoin, or any other cryptocurrency, is decentralized money. Since we are using Ethereum blockchain as the primary blockchain, we use some special class of cryptocurrencies, which are primarily created within the Ethereum blockchain, though they can exist in other blockchains as well. These special class of cryptos are called stablecoins. Some of the popular stablecoins are DAI, USDT, or Tether, USDC, TrueUSD, etc. The question is, what's so special about stablecoins? As the name implies, there is a stability in the value of these cryptocurrencies. The stability is provided by pegging these coins to a real-world currency, like US dollar. In other words, the stable coins remain constant unlike other cryptocurrencies. So, there is no fear associated with the volatility or sudden loss of value, normally associated with cryptocurrencies, when it comes to stable coins. Within the stable coins there are again two types. Some of the stable coins are backed by a fiat currency, like US dollar. For example, Tether, with a symbol USDT, and TrueUSD are two stable coins that are backed by the US dollar, in the ratio of 1:1, which means Tether will always be $1, and is collateralized with a real US dollar. Tether is the third largest cryptocurrency by market cap, as of March 2022, behind only to Bitcoin and Ether. The other type of stable coins are not backed by fiat currencies, but backed by other cryptocurrencies. DAI is a stable coin that belongs to this class, which also maintains a value of $1. This class of stable coins, which are collateralized by cryptos, are normally over-collateralized. What does it mean? Let's say DAI is backed by the cryptocurrency, Ether. For every $1 value of DAI, there will be, say, $2 value of Ether. This way, a fluctuation of $1, or one half of its current value in Ether, will still be sufficient to back up the DAI stablecoin. As you know, unlike the stable coins, cryptocurrencies like Ether or Bitcoin can be traded freely, and hence, the price of these coins can vary widely in a given time period. If stablecoins are pegged to a value of say $1, why even use them, instead of using the real $1 itself? If you have transferred money between countries, you'll know there is a lot of fees that go into the transfer of money. It also takes a lot longer. Let's understand how stable coins are used to address these 2 points, and how they are applicable in DeFi. We'll go into all the details about stablecoins in a different video. The cryptocurrency transfer will be done using automated computer programs called smart contracts, which are applications implemented in each node of the decentralized network. Smart contracts are software written with the business logic of conditional statements, which are executed when the conditions are met. They are immutable, meaning they can't be changed. You can watch our video on smart contracts to get more details. Now, let's look at the components of a DeFi system. First, we'll need a platform for developing and deploying a decentralized finance services. Here we use Ethereum platform for deploying all the financial services, which are the components of the DeFi. We already know we'll be using DAI as the stable coin because it's based on some other decentralized cryptocurrency, like Ether, since we are using Ethereum as the platform. One of the important services on DeFi is Decentralized Exchange or DEX, where you can buy, sell, or trade cryptos. The idea of decentralized exchange is, it doesn't have any central authority, and hence there are no exchange operators, no user IDs and passwords, and no logins needed. The smart contracts will implement the rules, and there is no need to deposit funds before trading. Decentralized exchange replaces centralized exchange, like Coinbase and Binance. But, why do we need a decentralized exchange? We'll take an example to understand this better. Let's say you buy some Ether coins worth $100 from a centralized exchange, like Coinbase. You need to pay some fees first. And let's say you got lucky, and the price of the coins reached $200, and you decide to cash it in by selling it. If you sell these coins in a centralized exchange, like Coinbase, you'll need to pay a certain fee, and then maybe you need to pay some taxes as well. On top of all this, it takes a day or two to complete the transactions. In a decentralized exchange, the transaction fees are extremely less, and the time it takes is only a few minutes to complete the transaction. Another service in DeFi is decentralized lending and borrowing through DeFi money markets. Well, let's say you have a bunch of cryptocurrencies, but you would have thought the only way to make money is by selling the cryptos. But, let's say, you don't want to sell it, and instead just borrow money by using the cryptos as collateral. This way, when you get sufficient funds to repay the borrowed amount, your cryptos are back with you, and you are free to trade them again. Remember, all of these borrowing and repayment is also executed through decentralized apps, or through smart contracts. Another popular DeFi service is decentralized insurance, where you can insure your cryptos, and pay a certain premium, to protect the value of your cryptocurrencies. This works very similar to the insurance that you purchase in today's market. Let's just list a few other DeFi services, like flash loans, where you get loan for a very short time period, apart from global trading, salary payment, etc. In fact, there are many DeFi services that can come into existence, by mixing and matching the DeFi services. Since this resembles building Lego objects, they coined a new term, called money Legos. There are some questions that may come into your mind. First of all, how popular is DeFi now? The simple answer is, it has not gained wider acceptance yet. Obviously, there are certain advantages with DeFi, which include decentralization, transparency, low costs, and reduced transaction time. However, it's still very early, and DeFi is only gaining popularity in the recent year or so, especially in the lending and borrowing business. There are a lot of issues that are still unresolved with some of the DeFi services. Also, DeFi services depend heavily on smart contracts, which have been prone to hacks and errors. We are still excited with the idea of decentralization of financial services with cryptocurrencies. Let's wait and watch, as this whole field evolves over time. Thanks for watching.